The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Still in Asia here. Nighttime in the Philippines. And trying to save bandwidth, so not showing the video. I know nobody's complaining about that, so we're going to just go ahead and announce that. So as we look at the S&Ps, we talked about where's the edge, how do you gain some edge, what side of the fence do you play on? Again, we've talked about this, not wanting to get away from these unfair highs on the daily. This is kind of the par for the course when you're looking to stay away from the riskier trade. Stay away from the short trade and just trade the breakouts, trade support on this, while the breadth, that aggregate calculation, I get my charts to work here. And what is this? Okay. That aggregate calculation telling us there was really no anomalies going on in the underlying instruments from a net kind of aggregate calculation. And again, the S&Ps are moving forward. They're moving north. You had a couple little trading opportunities off that 2083.50 area on the south side, but now we're opening up on the upside, and this is basically what you get. So, again, trying to block one side of the marketplace out. We were trying to stay away from those shorts, so at least it was an only take long situation. So we're going to take a look at the at the crude situation. This is the October contract. Shifted the numbers around a little bit on our weekly inflection points that we've been talking about on the September contract. 47, I believe it was 53, something like that. Now on the October contract, 48.06. So here's the weekly. Talked about, just kind of a wait and see on crude. This thing could have spun around above these weekly unfair highs, about $1 higher, using that as support. You just had to kind of wait and see how we were reacting after that just violent move up last week and the week before. So now we're below that 48.06, and here's the situation on the daily. So you've got now support at 44.85. You're smack dab in the middle of that profile, sitting around just, not even a really wide profile, so to speak, on the daily. But again, not a lot of edge here on crude. I mean, I think we could more than likely go back and retrace, even though some of the OPEC numbers and some of the oil numbers in general are kind of rolling into bearish tone. A trade back up into that weekly unfair high is probably in order at some point, 48.06. But, the big move's been made on last 2 weeks without question. Actually, the key reversal 3 weeks ago. But, what do you do with this now? Again, not a lot of edge here. I think if you caught some shorts getting below that 48.06, I just think you got to be happy with them. But remember, a chance to really trade with the probabilities, in my opinion, are favored at least to play defense extremely well, are around that 44.85, 45 whole number area, about another, $2 down below. So, again, kind of right in a no man's land-ish type situation. And the reason I think this thing could head a little bit lower is on our 240s. If you'll notice here, we kind of had the power moves up, and the 240s kind of regulated that move up. But now we've got a profile appearing above price action, this particular 4-hour segment, after we've broken down. So that's kind of got some bearish tones to it in itself. When you have profiles appear above price action, if you feel like you must trade right now, 47.43 is a little bit of a resistance point, and then you've got that higher area that we talked about, 48.06 on the weekly. And we could entirely explore the fair auction on the daily at some point, 44.85. But again, we're probably going to be churning around here a little bit. It's not going to be a safe one-way movement there, put it that way. Gold. Yeah, I mean, we're just going to pass on this because my feelings on gold. If you watch this show, I'm kind of long and strong and looking for any opportunities to buy it. You've got the POC on the weekly at 1331. You've got 1348 on the daily as another border. You can kind of buy breakouts above. You can buy support down into this 1331 area. You got initial targets of 66, 67 up top, and then you've also got 74. So again, I like the way gold's acting. I like the way on the long term it's not really coming off at all. If I can get my chart to pull up here. And, same story. Block out the short side. The riskier trade is to get short gold in any fashion. Well, come on. Okay, here we go. All right, so my charts are snapping back for some reason here. Sorry, guys. All right, here we go. Let's hit the dollar really quick. I actually thought the dollar would be rallying a little bit more, and let's see if we can get our charts to come up here. So we talked about getting that bounce off of that 94 general area, and that happened last week. I don't like the way this is kind of trying to revisit that area right now, but I'm not exactly thrilled about being short the dollar, so I'm looking to play defense still against this 94 neighborhood. You also got a new profile on the dollar on the daily, and that unfair low is around 94.20 and 94.21. Excuse me, 94.24. So you've got decent support down here. I'm looking for this to actually rally back up into 95 and higher. And that being said, let's just hit the notes because that obviously has something to do with the dollar. People feeling hunky-dory about buying treasuries. Got a nice bounce back above 132 yesterday, kind of hovering above. I still like trading this up into 133. And again, I know that the Fed is going to have to start at least dialing up the rhetoric again on we're going to raise rates at some point. But, again, the market really doesn't believe those folks anymore. So I still think the 10 year is the best long trade out there, period. We're going to hit the NASDAQ really quick, guys. We can get our charts to pop up. We're a little slow this morning. I'm trying to access a server from over here in the office in the Philippines, and charts are coming up a little slow. I tell you what, while we're waiting, here we go. NASDAQ's coming up right now. Similar situation to the S&Ps. Nothing on the weekly to really cause you to have any fear on the long side, and the daily's now breaking up above those 48, 16, 70 areas on the NASDAQ. So look out above. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were kind of finishing up with the NASDAQ there. Very similar situation to the S&Ps. Come on. Here we go. Having some delays in my charts this morning, guys. Trying to pull up the Shanghai, and I want to show you the real sweet situation that I like to look at. I mean, the crude oil trade was kind of fast and furious and just a massive move up, and it didn't have to consolidate above that 48.06 on the October contract. But I want to show you something that is kind of a normal kind of breakout. I mean, that was kind of a breakout above a pretty wide profile on crude oil, and didn't have a lot of faith that it was going to spin around above 48.06. But anything can happen. That's why we're kind of like a wait and see on the crude situation. But the Shanghai, this is a trade I really, really like. And I like the setup because we kind of gradually, instead of violently like crude oil, we kind of gradually, these are weekly profiles I'm showing right now, we kind of gradually changed gears and just kind of raised the bar as far as the latest support, latest profile lows on the Shanghai. And then we got that bust out last week. Not super massive bust. Is that the same as a super massive black hole? Not a super massive breakout, but good enough to call it a breakout. And now we're kind of coming down and retesting that breakout point. I don't want to kind of, and this is one of my favorite little setups. So we had one before, didn't hold. That really wasn't even a candidate back there. But you know, I like how the change in tone of the profile really predicted this. And this algorithm is something, and also that profile is very, very thin on a relative scale. That means you're supposed to be trading breakouts or breakdowns. There's a lot of things in play here on the Shanghai, but I love how this thing's kind of this week staying above and actually coming down the low 30.73. That unfair high is 30.69. So, and now we've kind of bounced off of it. So one of my favorite types of setups. And when I see this on any type of instrument in this nature, not just an index, I start kind of, you know, rubbing the hands together and the saliva starts populating the old mouth. Here we go. Let's take a look at a stock that we looked at. A caller had, this is kind of one that It's like, I wonder what that thing did. So I don't watch NVIDIA every day. But as we look at this, and by the way, we've got new home sales at 10 o'clock today, folks. Don't forget about that. It's going to possibly move some things around, but no, not the most impacting thing in the world. But NVIDIA, I believe it was Eric from Brooklyn had called last week, and I think we were, he's like, the long-term chart on this thing is ridiculous. What goes up this fast, can come down. And that's usually true. And he brought out a really good point when he said that. But until we start seeing, and now, this week, now you're starting to see a new profile attempt to appear. But, and this is on our long term, but we're actually a little bit higher than when he called last week. And we talked about, a lot of times in these uptrends like this, you'll try to leg into a lower term time frame, not leg into, but just kind of start viewing to really kind of see if it's okay to get in the water on the short side, or is it really just time to continue to turn the rents the same way and buy the stupid thing. We had a profile up here below price action last week, and I think this was Wednesday or so, or Thursday maybe. So there's Wednesday or Thursday. And that's a bullish setup, believe it or not. And, we talked about that would be support around 59.96.60. Didn't even quite get there, and now we're just kind of moving away from it. So it's cool that you've got a long-term profile attempting to appear this week. If the scanner, NVDA is in the scanner, I checked it. If you've got a new profile that's going to, kind of have this yellow peel back all week in the sell on the weekly in the scanner, then you're going to have a new profile on Monday. Then it will be interesting to see what that profile looks like come Monday morning pre-market and next Monday. And that's if this stays yellow. But then you've got some serious levels to play defense against if you want to start taking some shots. Now, you could have kind of taken that attitude like, hey, let's take some shots here. Let's take some shots here. Let's take some shots here. Let's take some shots there. I mean, it's been scary to try to trade the unfair highs on the weekly on this little thing. But, you've got a stock market that I don't think really has reached its peak yet. And I think Tom, I don't know if he's changed his tone, but, I think I was listening to him a couple of weeks ago, and then I kind of was starting to agree that some of the fundamental and technical things that may line up, that confluence of events, looks like it's going to happen this fall and September, and then the drill on September normally. So, 2220 I think is a number that he talked about. I'm not really disagreeing with that at this stage, and it might drag some things up. You kind of got a little bit of a bust out going this morning on the S&Ps, but it could drag a lot of things up. So you might want to just kind of think of also, in this case, it's a relatively strong stock. There's no question about that. The market could go higher. And is it really smart to start stepping in front of trains that are, in this particular situation? Let it show itself early. If it starts showing divergences against broad market, that would be killer. And at the same time, if that broad market hits 2220 and this thing's already starting to raise its hand as something that doesn't want to go any higher, then you got something to really start thinking about. Somebody in the den's asking, hi, John, can you look at RBOB gasoline? For some reason it is not in the scanner. Are we all going to be driving Teslas soon? Have you has anybody ridden in a Tesla in the den? Is that nuts how that thing will just pin your head right to the back of the seat and there's no gurgling sound coming from an engine? Isn't that wild? Yeah, I mean, they say, well, I forgot what the law is. It's a guy's name. It's not Murphy's Law. It's another one. But they say, Duffy, that technology doubles in those certain areas every 18 months or something like that. So And, that goes for microchip, microprocessors, semiconductors, a lot of different technology scenes. It pretty much holds true. And when I think about the Tesla, and yeah, Moore's Law, that's right, exactly. And when I think about a Tesla, and I think about kind of, the nutcase kind of in a good way guy that's driving all that, Musk, he's talking about, space and all those kinds of things. I mean, he's definitely got, and the company definitely has the spirit to really, put the gas pedal on this and really probably outperform Moore's Law, if you know what I mean. So we're going to hit that a little bit when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we've got Steve Banger on with us. Steve, you there?
Hey, John, I'm here. Good morning.
Hey, great. Good to hear from you.
Likewise. How is life in overseas?
Oh man, it was literally a trip to get here. But it's good to. Time zone's still kind of screwing with me, but yeah, it's good to get here. I mean, the food's. I end up eating a little bit healthier over here, as you know, kind of the Asian cuisine, and yeah, it's good to be here. How's
Right,
Chicago? Great. Is it getting brisk up
It's
there
nice.
yet?
No, I mean,
Not yet.
the weather is kind of moderating, right? So it's not as
Okay.
humid anymore. And we had the air and water show over the weekend, and my house is
Oh,
fairly
that's
close
right.
to the lake. Yeah. So my
Uh-huh.
house is fairly close to the lake. So I had the jets buzzing over my backyard. So that was rather exciting. A lot of people running around, so it was good.
That's a big event there. I forgot about that.
Yes.
Hey, we were kind of finishing. I want to get into what we were going to talk about, but we were finishing about Tesla, and I think the original question was actually about gasoline futures, but somehow we got off on Tesla. But guys, technically 233 is that kind of unfairly little in the weekly. We talked about hoping we could kind of get up in that area to short it. I don't really see any other things going on with Tesla right now, technically, except that we are starting to break down the daily right now. But Steve, this guy's he's a great salesman. He's a great mind, I guess, also. But this company's using some investor cash, huh? I don't know if you keep up with it.
Are you asking me?
Yeah. I know this is kind of a shot in the dark here, but the question, one of the questions in the den was, do you think these things are going to eventually kind of take over, the standard gasoline engine and kind of be the norm instead of the outlier? What's your thoughts on that, if you don't mind me asking?
No, I mean, in very general terms, I think that Tesla presents a tremendous opportunity for a couple of reasons. But it obviously has the issue of a very high valuation, which it has to grow into
Right.
so that it can justify the current market price. But when you look at Tesla as an automobile stock and compare it, and I don't know if you can do that, John, but if you run a spreadsheet of Tesla over General Motors and over Ford, the stocks pretty much trade 1-to-1 by now. I mean, they're very much in lockstep, other than one brief period a couple of months ago where Tesla really outperformed. But on a daily pattern now, the stocks swing very much alike. So Tesla, by and large, to me, is an automobile company. Admittedly has a valuation problem, but some of the things it's doing from a visionary perspective are very significant, and I think offer tremendous potential for the company.
Yeah, it's just amazing. I mean, I think you hit the nail on the head there. Just innovative thinking, really. And think of the guys who had that have all these plants, the Fords, the General Motors, and the whatevers, and all the, as well as I, the hardest part about starting a business or even keeping one, is the infrastructure. Like getting things in order. And you and I kind of laugh about that because we do some things together. It's always you find a way every month to try. You got some profits, and you find a way to like either refurbish something, add necessary, infrastructure or equipment or whatever that, and that foundation continues to grow to continue to, move forward. And a lot of these car makers, they have all those processes in place, and he kind of had to really, really build everything from scratch, which, again, costs a lot of money this day and time.
Yeah. I mean, the one thing I want to say about Tesla, and you see, I don't even think of Tesla anymore as an automobile company, because what he's trying to do with SolarWorld, the company he's trying to take on right now, is really almost like a generational change in our industry supply pattern. And what I'm talking about specifically is that solar energy has a potential to become the backbone of quite a few industrialized nations. And just to make that point, Chile, the country of Chile, awarded a solar energy power generation station just earlier this week. And it was awarded as the lowest ever recorded price for a megawatt hour ever, which was, I want to say, $28.19, if I remember correctly. Wow. And admittedly, they built it in the desert. There are no clouds, so it's perfect conditions. But at $28, the power generation costs about half of what a coal plant cost. So it's 50% cheaper in that particular situation than coal, which has traditionally been the cheapest go-to power generation vehicle available. And the other side of that coin is that the prices for the modules are dropping anywhere between 5 to 10% per year right now. In addition to that, the efficiency of the energy conversion within the cell tends to increase as well. So between prices falling 5 to 10% and the efficiency of the cell increasing by, let's say, on average, perhaps 2% or 3%.
And you know that's going to continue to get better.
Yes, exactly, right? There's the same thing we have had in computer processors. And between those two things, these things are going to become so cheap and so efficient that any of our conventional fossil-based energies won't be able to compete just from a price perspective. And I believe that ultimately price will drive the adoption of electrically powered cars, because I really believe that's the one thing which is holding it back right now. So in other words, if you can get a Tesla vehicle for the price of a mid-sized Beamer, a lot more people are going to buy it, right?
Yeah, no doubt. And then this ethanol thing will, who knows, God knows what, hopefully that'll just go away.
Yeah, potentially.
That's the biggest inefficient thing out there, I believe. Well, listen, what do you? We talked about the the stock market going up again. First part of the show. What's on your mind? Have you been looking at anything? I mean, I know the volatility's. In my opinion, we've got some impending volatility coming. But let's talk about that. What are your thoughts?
Yeah, I mean, in terms of volatility, it's going to go up at one point, right? It's just a question of time. We're pretty much at yearly lows, and it's just a question of time. And for what's worth it, the forwards in volatility have not made new lows ever since the lows from like 2.5 weeks ago. So traded volatility has still not made new lows, despite the stock market being completely dead. So I think a couple of things are building up there, which might or might not get resolved when Yellen talks on Friday.
We got to get a break, but can you stay on, because I want to. You had talked about a strategy last time we talked, and I want to see if there's any new insight on that, and then we can kind of talk about some other things. Cool. All right, guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We got Steve Banger with us. Just a couple updates before Steve and I start talking. This a British pound, really nice situation, came down and touched that 130.19 area yesterday and is moving up, trading about 150, 200 pips higher. Same thing for the Australian dollar. Talked about trying to buy that yesterday off of those daily unfair lows, trying to block out the short side. And if I can get this to come back up, and my charts are a little bit slow here, Steve. Let me see. Just point out the numbers again. As you can see, we kind of bounced off that 75.87 area, and again, trying to block out the short side on the Aussie dollar. And the original question, Steve, that came from someone that sparked all the Tesla stuff was we were going to look at gasoline, which we're going to look at ultimately here. But I was looking, and I think he was asking, was it in the scanner? So I went to the scanner. It's not in there. We can put it in there. We will put it in there. And I was looking at the scanner at some of the futures, and I was looking at milk futures, and I'm like, well, if we can put milk futures in, I guess we could put goat futures and some other things, but definitely gasoline. So we'll get it in there, RJP. Steve, the volatility play you talked about last time was that kind of like give yourself a little room, kind of December type. Could you repeat that and then give your thoughts on any other?
Yeah,
go ahead.
Yeah, I mean, what I'm saying is that you really want to be long volatility on those levels. Volatility is basically at pretty much the lows, like 2-3 year lows right now. The 12, we're trading around 12 right now, volatility. And the nature of the market dictates that it exhales and it inhales. And at one point, we're going to expand in volatility. That might be in 2 weeks or in 2 months. But the way the option pricing works in those instruments is that the volatility pickup will translate into very significantly expanding option premiums. And I'm long volatility premium right now. I mean, it might take 2 weeks, might be 2 months, but there's going to be a blip in volatility, and that should lead to immediate profits. Simple as that. And if you go back into 25 to 30 in the volatility, like in talking the VIX now, if the VIX goes anywhere between 25 to 30, you should be looking at 1,000% in those premiums. I know that sounds like a crazy number, but that's what it is the last time in May, June. And even if it only goes into the 20, like 18 to 20, which is obviously much more doable, you're at least looking at 400 to 500%, give or take it.
I agree. I mean, just the, and I like, I was kind of referencing some things that Tom had said earlier, and I'm kind of in agreement with it. It's 2220 up there as a technical kind of mark right now. or in that general area. And then that's kind of coinciding if you kind of just, I mean, this thing could move up there in a blink the way this market's acting. But, that kind of number targeted with that fundamental news that seems like it's kind of impendingly coming online for like rate discussions and when, these next meetings are and things like that. I mean, you're going to get at least some positions shuffling based around that. And I watched that position you talked about last time when it was a 1,000-fold move, and we were actually looking at it together. Yeah, I mean those things can happen, and I like the way this thing's setting up for kind of a technical fundamental confluence in the near future. And plus, you got September, sitting here, and you got some seasonal things also lining up. So you got 3 things actually lining up here.
Yes, I would agree. And I mean, yes, I completely agree. And I think, simple as that, right now there's complacency in the market, and complacency never lasts. That's just what it is. At one point, complacency is going to evolve into anxiety. I'm not saying outright fear, but it's going to evolve into anxiety, and that's going to drive volatility. It's just a natural pattern of the market.
Yeah, it also seems like people are getting really comfortable with the fact that the markets almost are going to be in control no matter what. Also, have you started getting that feeling like people have started talking about the markets getting commoditized and
Oh, they are. I mean, just talking about the market getting commoditized, the Swiss National Bank now owns more shares of Facebook, Apple, and Google than some of the biggest pension funds we have in the country. I sent you an article about that actually the other day. The Swiss National Bank owns more than CalPERS or Janus funds. And they're an indiscriminate buyer, right? I mean, that's what quantitative easing does. They're just an indiscriminate buyer of equities. I mean, they try to be selective and broad-based, but it goes to what you just said. The market is being commoditized because you have buyers in the market now who have no choice but to buy. It's not a selection anymore.
Right. And that's when things change. I got to tell you this. Something you said back in, you probably don't remember this, but I remember it. We were in Chicago up on the 12th floor, and you said something back in about 2001, maybe it was 2002. It always stuck in my mind because it was kind of the same situation where I think the volatility was really, really low back then. And you were talking about a sawtooth charts where the market was going to maybe open up and that was where it was going to be for the day. And the volatility just wasn't going to be there until the next day. I don't know if you remember that.
No, I really don't. But that's okay. I hardly remember what I did yesterday anyhow in my age group.
Well, it always stuck in my mind. I was like, good Lord, that would be bad for trading. But I mean, but that's kind of, I think the people are starting to convert into like, well, wow, this is a foregone conclusion. Everything's going to be okay no matter what, blah, blah, blah. And then, that's when the seams come undone, Yeah.
I mean,
so, yeah.
And just to mention one other thing, along the same lines as what I just talked about with the Swiss National Bank, I mean, there's no open talk in the market that the Japanese central bank will forgive the government debt they're holding and just monetize the entire debt they have. Because there's really no way right now to keep that going, right? So there's outright talk in the market to monetize the Japanese debt. So if that were to happen, highly inflationary, and that would certainly jolt the market. I mean, it's a little bit far out there, but the reason I'm mentioning it is that it doesn't necessarily have to happen, but if talks get serious about stuff like that, other central banks will look at it. Because if you think about it, right, it's all a progression. The Japanese were the first one to really pursue a policy of quantitative easing, of monetizing their debt.
And enable that thinking, for other people.
Yeah, and everybody else followed. And everybody on some level rides the same train. Some of us might be a little bit further back in the train, but we are all in the same train. So if the Japanese central bank looks at it and says, okay, what else can we do to provoke inflation and stimulate growth? And their solution is conventional QE doesn't seem to work anymore, and they're well ahead of conventional anyhow because they're buying stocks and real estate outright, then forgiving the debt would be the next progression in that whole thing.
Yeah, awesome. Hey, listen, man, thanks for coming on today. We're going to go to our last break, and I'm going to wrap up, but appreciate the call in, and I'll talk to you later.
Talk to you later. Bye-bye.
All right, man. Okay, bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We had Steve Banger on. That was just a treat. I love talking to him. He's got such a good perspective on things, the macro level type stuff a lot of times. And, a lot of the big money is made. I mean, when I was, really literally trading for a living, you have, the way I looked at it was this. I mean, I'd look at the year. I knew I was going to have 5 really big days, and I better be in front of that screen, to make sure I don't miss one of those days when it's supposed to happen. I knew I was going to have 5 days where I was going to kind of get my head kicked in a little bit. It's going to make really good money on 20 days, lose some decent money on 20 days, and then the rest of the year I was kind of going to churn around. But a lot of those big money, those 5 big money days were going to be on macro plays. It wasn't going to be kind of day trading the S&Ps on the 60-minute boxes, if you know what I mean. So So getting a macro view and stepping back, putting on a spread or two, letting it unwind, not getting shaken out of a trade that you really have some deep conviction about, and being able to actually press the gas pedal and add to the position when it starts really moving your way. I tell you what, I mean, that's where the macro play comes in a lot of times. And when you start seeing the green shoots on something and you see the blood, I mean, don't get carried away, of course, and still play defense. I mean, those are when you have those. Those are when you have those bell ringers. So, you know, it's good to talk to Steve because it kind of pulls me back sometimes and allows me to kind of look at a bigger scale. And that, you know, that volatility play he's talking about, I mean, in my opinion, that should be a part of your portfolio. You know, so throw it in a different segregated sub account or whatever you want to call it. Don't look at it. It is what it is. It's probably, you know, when the volatility doesn't increase, it's going to be a little bit of a tax every day on the position. But when it happens, it happens, and then you're buying rounds. If you go to a bar and buy rounds. So, come on, charts. Well, I'm having some issues with my charts this morning, guys. I don't know why this server's kind of stuck here. Let me see what's going on with my... I may have to restart it. Yep, let me get out of that. We got about a minute left, and I'm going to try to start my currency server one more time here. Let's see if we can... I want to look at the yen again. But, you know, I mean, everybody looks at the year a little differently. I mean, you know, one of the things we used to do in our prop environment was we would... let me see if I can get my screen back up here. You know, we teach everybody kind of a way to break even. And obviously that's not a way to move forward because back then the commissions just ended up grinding you up if you were kind of a break-even trader. And I don't know if we're going to get our charts back up. But, you know, it was up to that particular trader. And, you know, whatever, like 70% of them would not make it. But it was up to that 30% to kind of take that information and kind of uniquely twist it in his own way that's going to work for him based on his temperament. So, you know, that's kind of the same thing in you know, when I'm talking about 5 big days, 5 small days, or 5 the opposite thing I was talking about earlier. That was kind of the way I looked at things. And if I kept everything in the back of my mind on that hard drive, that I sat there every day and kind of collected it, then I knew I was never going to not be able to recall that information. So, guys, my charts didn't come up. Stay tuned for Larry. He's next. You'll thoroughly enjoy it, and we'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.